All right, let's dive into a really fascinating strategic report that's trying to map out the world of 2026. The big idea here, something called the new realignment. It's all about a world that's fragmenting and diverging. So let's break down exactly what that means for all of us. This quote from the report just nails it. You need to forget about a world where all the big global trends are kind of moving in the same direction. 2026, they argue, is going to be defined by high dispersion. It's a fancy way of saying that countries, markets, whole industries, they're all starting to pull in wildly different directions. And the two big engines driving all this? Technology and geopolitics. So this new realignment is the absolute core concept. It basically means the old playbook, having one single global strategy, is pretty much dead. Instead, it's all about understanding this growing split between markets that are being proactive and adapting and those that are just falling behind into some serious distress. Finding success is going to be all about navigating that gap. So here's our game plan for this explainer. We're going to kick things off with political risks, then pivot to a pretty surprising financial opportunity. After that, we'll get into a new geopolitical doctrine that's shaking things up. Then we'll look at two huge economic megatrends that are going in opposite directions before we wrap it all up with the key takeaways. First up, political volatility. One of the biggest sources of uncertainty for markets in 2026 is a calendar that is just absolutely jammed with high-stakes elections all over the world. I mean, look at this. The entire year is just packed with potential political fireworks. We've got major contests from Brazil and Colombia over in Latin America to Thailand and Bangladesh in Asia. And each one of these elections carries its own unique risks and, of course, the potential for some pretty serious shockwaves in the markets. And what's really interesting is that the political conversations, they're not the same everywhere you look. In Latin America, a lot of these votes are basically becoming referendums on the people currently in power. But over in Asia, the debate is much more about the fundamental economic path forward. Populist spending on one side versus a focus on industrial growth on the other. Now, in the middle of all this political risk, a really specific financial opportunity is starting to pop up. It's in the world of sovereign debt, but probably not where you'd think to look. So here's the key takeaway. The best opportunities aren't in the safest countries. No, they're in countries that have already been through the fire of a debt crisis and have actually come out the other side with a real plan. They've done the hard work, and that has created this kind of sweet spot for investors. Ukraine is a perfect example here. It managed to negotiate a deal to cut the principal on over $20 billion of its bonds by roughly 37%. That is a massive step towards getting their finances back in order. And this isn't a one-off. Zambia is another great case study. It was able to secure a 22% reduction on its debt principal, which gives its economy some much-needed breathing room. And the market? Well, it absolutely loves this kind of clarity. After its restructuring deal went through, Ukraine's bonds, which had been trading way, way lower, just soared to over 70 cents on the dollar. That is a huge vote of confidence. This pattern of success, of course, leads to the big question for anyone investing. Okay, so where could this happen next? Who is on the verge of following this new playbook for recovery? Well, the names to watch here are Lebanon, Venezuela, and Senegal. And then you have Argentina, which is kind of a special case because it's already being supported by this massive $40 billion financial backstop that was put in place during the Trump administration. Okay, let's switch gears a bit now from finance to geopolitics because there's a new, pretty assertive American foreign policy that is dramatically reshaping the relationship with Latin America. And it even has a name. It's being called the Donroe Doctrine. The easiest way to think about it is like a modern and, frankly, a more aggressive version of the old Monroe Doctrine. The main goals are pretty clear: secure vital resources for the U.S., and, maybe even more importantly, to push back against China's growing footprint right in America's backyard. And look, this isn't just some abstract theory being debated in think tanks. The Donroe Doctrine is already having really immediate and dramatic effects on financial markets. I mean, the most stunning example has to be Venezuela. After a U.S. operation helped trigger a change in leadership, the country's distressed bonds shot up by 50%, jumping from the low 20s to the high 30s almost overnight. But as always, every action has a reaction, right? As the U.S. asserts its influence more forcefully, some nations are pushing back by getting even closer to China. Colombia's a perfect example. They've officially joined China's massive Belt and Road infrastructure project. This is the great power competition playing out in real time. Our final theme really drives this whole idea of high dispersion home. We've got two incredibly powerful global megatrends, and they're heading in completely opposite directions. So first, let's look at tech. The AI arms race is on, no question. But it's not being paid for with cash. The tech giants, the hyperscalers building all that massive cloud infrastructure, are taking on just enormous amounts of debt to fund their AI ambitions. You don't have to look any further than Oracle, which is kind of seen as a proxy for this whole trend. Its total debt has just exploded to $124 billion. That is a massive bet on the future, and it's being financed by borrowing on a truly epic scale. And then at the exact same time, we're seeing this roaring bull market in old school physical stuff you can actually hold. Gold is seen as that geopolitical safe haven. Uranium is surging because of a nuclear energy revival. And copper demand just remains incredibly strong. It's a total contrast to the debt-fueled digital world. Okay, we have covered a lot of ground. So what are the most important things to take away from this new global landscape of 2026? Let's try to distill it all down. Here you go, the 5 key pillars of this new realignment. First, constant political risk is just the new normal. Second, the smartest debt plays are in countries that have already hit the reset button. Third, the US and China are actively carving up spheres of influence. Fourth, you've got this huge divergence between tech debt and hard assets. And finally, success in this new era, well, it's all about being proactive, not reactive. So, we'll leave you with this final thought to chew on. In a world that's pulling in so many different directions at once, what's the bigger mistake? Is it trying to find one simple story to explain it all? Or is it failing to see all the different opportunities hidden inside the complexity?